I remember when I first started my accounting practice, I had a client come into my office looking completely lost. She started her business only a month ago and she just received a notice from the ATO about needing to submit her quarterly business activity statements. What is this business activity statement thing? She asked me. If I pay this, do I have to pay taxes when I lodge my income tax return? It's a common question for small business owners focused on operations and no tax compliance. But not submitting your BASs can lead to penalties, so it helps to have an understanding of what it actually is. Essentially, the business activity statement is a way for the tax office to get a broad snapshot of your business transactions over a period of time and collect your taxes throughout the year. It combines information from your GST, income tax on business profits, and wages for your employees. Now, I don't want your eyes to glaze over when I start rattling off about tax concepts, so let's talk about what business owners really need to know when it comes to your BASs. So when I said the BAS is a way for the ATO to get a snapshot of your business transactions, what exactly does that mean? Well, the business activity statement allows you to report and pay various tax obligations all in one place. This includes things like GST, reporting your goods and services tax obligations for sales and purchases, PAYG installments, making payments towards your income tax based on the earnings for the business, and wages tax for businesses with payroll and employees. Basically, instead of having to report and pay each of these tax obligations separately at different times, the business activity statement bundles them together in one simple statement. It's generally submitted quarterly so the ATO can get a regular pulse check on what taxes your business owes or is entitled to. One of the great things about BASs is that it allows you to get back money that your business is entitled to through credits and tax incentives. For example, you can claim back GST input tax credits on business expenses and purchases. So if you buy stock for your store, purchase equipment, or pay contractors, you report it on your BAS and you get the GST you paid back, which is normally 10% of what you paid. That saves you cash flow. Business activity statement also lets you claim fuel tax credits and other incentives, so you can potentially get a nice chunk of change if you submit accurately and on time. Now, in terms of what goes into the BAS, on the sales side, it's a matter of reporting gross sales and the total GST included in that amount. You need to collect 10% of your total gross sales and pay this to the ATO. Easy enough to pull out of your bookkeeping system. It's worth mentioning here though that some businesses in certain industries such as education, medicine, childcare, or health are lucky and do not need to collect 10% GST on the total sales to remit to the ATO. Where things get a bit tricky is the PAYG installments towards income tax, which I like to call the prepayment of income tax. The ATO calculates what you might owe based on your most recent income tax return and requires you to pay part of that in each BAS. However, in your first year of trading, or if you've not made any profit yet, there will be no PAYG installment required, as we don't really know how much profit you're actually going to make. But once you start making profit in the business, you have to make sure you're putting away from each payment period to cover it. If you have any problems, an accountant can help you estimate the amount and adjust it as needed each quarter. Some businesses can vary the PAYG installments to nil. If you pay yourself or employees through payroll, then you will need to report the gross wages and wages tax to the ATO via the BASs. All the taxes that are withheld on behalf of your employees are supposed to be paid to the ATO on a quarterly basis or monthly basis. Loads of business owners do not calculate how much they owe to the ATO and treat this money as spending money for their business instead. And that's where they run into cash flow issues, as they use up all the money that is supposed to be for their employees' taxes. Now that you know what the BAS includes and why you need to submit it, let's talk about how often it needs to be lodged. Lodgement frequency depends on your business GST turnover. If you have a GST turnover of $20 million or more, or your annual wages tax is more than $25,000, you're required to lodge monthly. And if you have a GST turnover of less than $20 million and your annual wages is under $25,000, you can lodge quarterly. This applies to most small business owners, and you can also elect to lodge monthly if you prefer that. If you voluntarily register for GST and have a turnover of less than $75,000, you can lodge annually. However, you gotta be a bit careful because this often leads to cash flow issues because you're paying annually instead. So in summary, most small to medium-sized businesses normally lodge BASs on a quarterly basis. This allows for more regular reporting and installment payments rather than one large annual tax bill at the end of the year. If you have a BAS agent or a tax agent, your quarterly due dates align with financial quarters. Quarter 1, July to September. Due date is the 25th of November. Quarter 2, October to December. Due date is the 28th of February. Quarter 3, January to March. Due date is the 26th of May. And finally, quarter 4, April to June. The due date is 25th of August. If you don't have a BAS or a tax agent, you normally only have 4 weeks after the quarter ends to lodge your BASs. So be a bit careful with the timeline. I would suggest marking these lodgement due dates on your calendar or set up an automated reminder so you never miss this one. In terms of how to lodge, the ATO offers an easy online lodgement portal through the business portal. You can log in and fill out your BAS digitally based on the figures from your accounting system. Your tax agent or BAS agent can also lodge on your behalf. Now that you know the lodgement frequency, due dates, and process, let's shift gears and chat about what happens if your business activity statement is late. I don't love being the bearer of bad news here, but missing your BAS deadlines can lead to some not so fun penalties from the ATO. And given how broadly the BAS touches various different tax obligations for your business, like GST and income tax, the penalties can add up substantially for late lodgements or payments. For the 2023 to 2024 financial year, a penalty unit amounts to $313. So you could be fined up to $1,565. The bigger the entity, the higher the penalty units. For example, for a medium entity, the penalty unit is multiplied by 2. And for large entities, the penalty unit is multiplied by 5. If you're finding it hard to pay by the due date, you may be able to enter into a payment plan with the ATO. But if you struggle to meet the payment plan due dates, you'll also have to pay general interest charges. So you get the picture. It's best to avoid missing the deadlines for payment and lodgement. Before we wrap up, let's circle back to the key points I want you to take away. This business activity statement might seem tricky, but really, it's just a way for the tax office to bundle up all the different taxes that you need to pay in one place. Hitting those deadlines is important to avoid any penalties. But even if you have any questions, that's what your accountant's here for. We'll make sure filing your BASs isn't intimidating. Other than that, I hope this video sheds some light on what BASs are, why it's important, key deadlines, and how your accountant can make tax compliance less intimidating. If you find this video useful, don't forget to like, subscribe, and tap the notification bell below to stay updated. And if you have any questions about BAS lodgements or accounting support for your small business, drop them in the comments section below or reach out. See you guys later.